Welcome back, ladies and gentlemen, to another one of the market maker manipulation templates. 1 out of the 6. We're going over the seek and destroy. Okay, now, as you can see here, the profile, which is right here, if I can get my pointer, thank you. The profile is neutral, meaning that it barely goes anywhere the whole week. Okay, yeah, the Friday's bearish, so you might think, well, it's bearish, right? But most of the time, it stays in a range. Okay, it's very unlikely for it to even go anywhere. This is how you would want to see it. This is like, what's the word? This isn't a perfect world. All this up, and then straight down. This is a perfect world right here. This isn't always going to happen. And with the examples I'm going to show, even this doesn't even happen. And when they say low probability meaning you're not going to find a lot of good trades. Okay, and the reason I say that because some people confuse low probability with taking losses, and that's only true if you don't know certain things, if you don't know enough. Okay, and the reason I say this again is because I'm teaching you how to analyze these markets, no matter if it's low probability according to ICT, because I have got to that point when it comes to these markets, and I understand that everything that price does is not random. So whenever I say low probability, just know I mean low probability of taking trades, not low probability as whenever you do take a trade, you're most likely going to take a loss. Yes, that is true in this case if you don't know what you're doing. But since I am teaching you the way on how to analyze these markets so precisely and get such a clear narrative on it, we consider low probability not a lot of trades, or we won't get a lot of trades within a week. Okay, and another reason this says low probability is because this barely forms, barely. It says right here during interest rate announcements and non-farm payrolls, but even still, I swear, I even looked. I had to go back a year, I think. Matter of fact, let me show you this example right here. If you look at the bottom, that crap says the 27th of November. I had to scroll back this far just to find two examples. This is the first one. I had to go farther for the second one. But just look how many candles I had to scroll through, and I did this for like 2 hours straight. That's why it's 11 o'clock right now. I should have been recording this at like 6, but I had to sit here and look for the example just to teach you. And this is how rare it is. I had to go through. Let me see, from here all the way to here. If you see, do you see where it says 3,202 bars at the little whatever that is, the insight thing up there, the statistics up there above the bar? I had to look through 3,200 candles or 3,000 candles just to find one example. Okay, now mind you, I had to go even further for the next one. I just have to say this because I'm trying to prove to you how rare this seek and destroy manipulation template forms. I'm still scrolling back, still going. This is the 3,000 bar. This is the first example that we're going over, the bullish one. Keep scrolling, keep scrolling, keep scrolling. Still haven't found it yet, have we? Nope. Still haven't found it. Still haven't gotten to it yet. Still haven't got to it. All the way until last year, April 2024. Okay. The funniest part is that we can't even see how many bars it takes because it is so far away. Like, that is how far away it is. It is over 10,000 hourly bars. So what I'm basically trying to prove to you here is that this right here, this does not form a lot. It really doesn't. It says it can form during interest rate announcements, aka FOMC, or non-farm payroll. But even if I look through each month of non-farm payroll for months back, all the way for like 3 years back of price action, and this did not form. Matter of fact, it formed on weeks that did not have FOMC and that did not have non-farm payroll. Okay, so I'm gonna say this again. This is good to have in your arsenal to know, to just be in the know. But this rarely forms. Rarely forms. Okay, so please keep that in mind. Anyway, enough of me talking. That was like 4 minutes of talking. I'm so sorry. But let's go ahead and jump into our example, which is right here. Is this the bullish one? Yep, it is. Here is our bullish one at this line. We're going to full screen this, and let's get started, shall we? So since we know that this is the bullish seek and destroy, let's go over that real quick. This is the bearish one. Let me switch to the bullish one. In a perfect world, okay, you want to see Monday drop lower. Okay, this is the bullish example. As you see, seek and destroy, bullish Friday. We should see Monday drop lower, Monday and Tuesday drop lower, creating a low, right? A rally back up, Wednesday creating a high, a rally back lower, breaking Tuesday's low on Thursday, okay, in which Thursday should reverse, heading higher, and then Friday continuing that delivery higher. But like I said, that's only in a picture perfect world. This isn't. This is just a perfect world. Okay. This is not. It's not picture perfect like this. I promise you. I'm gonna show you in the chart in just a second. But that's how it should look. We'll just pay attention. Since we know in hindsight that this is bullish, why? Why is it bullish? How did this deliver like this? Why did the market close bullishly like this? Right. First, let's jump on to the daily, right? We're obviously gonna jump into the daily first. Let me mark a line right here so I remember where to go back to. And never mind, it just put us right back where we left. Here we are. Okay, so first, JD's and Littleman. We have a bunch of accumulated liquidity right here. Okay, we're accumulating just back and forth. So we can mark each one of these lows. 1, 2, a bunch of equal lows right here, and then 3. Boom. Okay. Is that a break-in market structure? Yeah, that is. Okay, yep. So we have a bunch of accumulated liquidity below us, right? Prices accumulating higher before our week, okay? It was accumulating higher, higher, purging buy side consistently while continuously creating sell side liquidity. Sell side liquidity, sell side liquidity, and guess what? More sell side liquidity, and not a first, not a second, not a third point, but a fourth point of sell side liquidity that we have below us, which is from this point 1,000 points below us, in which price does eventually deliver that 1,000 points. But anyway, we can currently see that previously, before our week started, we had a break in market structure at this swing low right here. It's very minimal, but it did it. There's your break in market structure right there. Price comes back up into these last 3 up close candles right here, which is your order block. We can mark that as order block. Or if you want to just add the quadrants, sure, we can do that too, so it won't just be a big box in front of our camera. I mean, not camera, but in front of our screen. There's a quadrant, here's equilibrium, there's lower quadrant, and there's upper quadrant. So we can clearly see prices meandering around all levels. Like, it's rarely doing anything. But I'm sure if we drop to the 4 hour, we'll get a clearer view of what price wants to do. And speaking of that, let's do that. Let's jump to the 4 hour in just a second. I just got to make sure there's nothing else here. We got short term. That makes this an intermediate term. Okay, so that means price will manipulate in the future, so it can come back to this high. So okay, that makes a lot of sense. All right, now we can jump down to the 4 hour. Just had to do my analysis real quick. Anyway, 4 hour. Here we come. And is that the first example? No, I think that's just a random line, isn't it? Wait, where is my example at? Did I mark it? Wait, someone let me know if I'm retarded. Okay, here we go. Here we go. Well, no, this is the bearish example. See, how in the world did I get to the bearish one? No wonder I was looking so confused. But anyway, we're going over this right here. Since you want to adjust. We're going over this one, the seek and destroy bearish Friday, because apparently my screen jumped to the bearish example, which I don't know how it did that. But anyway, here we are. We can clearly see that price wants to go lower due to the break in market structure, okay? We have this liquidity void right here, this gigantic liquidity void after exiting this consolidation. So price is going to tend to fill this all the way to here. What is this? Is that the open? Yeah, all the way from that price there. And it filled it to the tick. Actually, I think that is to the tick. Let me see. You drag that over, and we're going to zoom in and see. Well, close to it, close to the tick. But it was about, yeah, 5 ticks away. That's close enough. 5 ticks away from being precise. But that's precise enough for me. Price is not always going to be perfect. Anyway, we have price hitting this order block here. See this? This order block, it gets hit within this candle here, delivers lower, price comes back up into the propulsion block right here, drops lower, creating that liquidity void. So we can say that these two up close candles are another order block, right? Price hits this order block within, the week that's delivering. Okay, so we're just gonna keep that in mind. But it hits that order block while it fills this liquidity void. And then, mind you, we have a bunch of sell side liquidity being accumulated down here. Do you see that? Bunch of it. See that? Low. Equal low. Equal low. Equal low. It's just right below us. Do we got any equal lows up here? Barely. Yeah, up here. But remember, price is not going to come up here. Why? Because we have this high as an intermediate term swing. We're thinking now, right? We're thinking. So let's go ahead and drop to the hour now, since we got all of our what's the word? Our reference points. Okay, that's the bullish example I was supposed to be doing, but for some reason my chart wants to adjust itself, and it's like, nope, I don't want to do that right now. Let's do the bearish one. And I indulged. I was like, fine. So starting from Monday, okay, since we know that price wants to go lower, and we already see that, the whole manipulation template delivers, we now have to explain and go over why and how it delivered this. Okay, so first off, Monday consolidates. It just does that. But what is it supposed to do in the example here? It's supposed to go higher, just like create some sort of high. Did it do that? Not really. Not really. Kinda, sorta. If you want to mark that as the high, then yeah, you can mark that as the buy side liquidity for Tuesday to take out. So yeah, if you want to say that, then yeah, that's buy side liquidity. But other than that, I wouldn't really consider it a high. But in this example, we're gonna do it anyway. So Monday does accumulate and create that high. Okay, it accumulates. Why? So Tuesday can deliver lower. See that? Tuesday creates that high. Well, Monday's supposed to do it, but Tuesday trades away from that high, dropping lower. And Monday does accumulate while creating that high, so Tuesday can actually drop lower. Tuesday takes out that high, actually. It does take out that high. And matter of fact, no, I just thought about something. Tuesday actually did do it. It actually did do what it's supposed to do. So I was right. I was trying to please the viewer to make it simple. But no, Tuesday actually did its job by creating the high as it was supposed to right there. So that's our high here. All Monday did was accumulate, so Tuesday can do what it needs to do. That's all that was for. That's all this accumulation was right here. It's just for Tuesday. Just for Tuesday to prepare, okay? Keep that in mind. Tuesday kicks in at 9:30, creates that high as it's supposed to, and then just dumps as it's supposed to inside of the manipulation template right here. Monday consolidates in this case, okay? And remember, each day is not going to be picture perfect, or it's not going to be in a perfect world, okay? Understand that. So Monday, instead of rallying higher, it just said, okay, I'm just going to consolidate so Tuesday can rally higher, because hey, why not? And it does it. So since Tuesday created that high and dropped lower, we should see Wednesday go back up and take out that liquidity pool of buy stops, as it says here, right? Well, let's see if it does that. Wednesday kicks in right along here. Matter of fact, before Wednesday even opens up at this candle here, which I think was an economic event. Yeah. Oh, wow, that's funny. That is an actual economic event, but it's not non-farm payrolls, and it's not FOMC. This will be something like CPI, most definitely. So before the market opens, price takes out these equal highs here that lines up with Tuesday's high, and when it purges it, it taps the order block that we marked earlier. It hits the order block, CPI kicks in, dumps. Now, price did two things here. Two things. Listen up. Wednesday was supposed to just take out this high. Just that, only that. But I said Tuesday. Did I say Tuesday? I don't know if I did, but Wednesday, if I did say, let me correct myself. Wednesday was supposed to only take out this high. It was supposed to just head higher. It wasn't supposed to head higher and drop. It was just supposed to head higher. So Wednesday has taken the role of 2 days. Wednesday in itself, and then we have to find out what the other day does. So what Thursday should do in this model is drop lower, right? But Wednesday, in this case, came up, took out the high, and dropped lower. So it took over Wednesday's role and Thursday's role. Pay attention. Since Wednesday took over its own role and Thursday's role, what should Thursday actually do? Now, there's a couple things that can happen here. Price can rebalance itself and prepare to deliver Friday. Okay, that's what it can do. Sometimes Thursday will opt out and it'll be like, no, I'm not going to take the roll for Friday and I'm going to wait. I'm going to wait and prepare Friday so it can do whatever it got to do. It can do that sometimes. Every day doesn't have to take a roll of another day. Okay, because Wednesday took over its own day and Thursday's delivery. But what is Thursday going to do? Thursday decides to head higher. Well, what does it do in the manipulation template? It heads lower. So if Thursday's delivery has already been taken over by Wednesday, as seen right here with this gigantic down close candle, we should see Friday's delivery get delivered some way, somehow, because Friday heads lower, right? We should see that. Since all these days have been knocked out up here, Monday, Tuesday, Wednesday, Thursday, the last day of delivery is Friday. And what does that do? It heads lower. See that? So how does Thursday opt out and prepare itself? How does it do that? It does that by first, before it even heads higher, it leaves behind sell side liquidity. See this? 1 low, 2 low, 3 low. So we have a bunch of equal lows on here, okay? On Thursday, when it opens up, it rallies higher, okay, filling this liquidity void. That's another reason why it's doing it, because it's filling this liquidity void and preparing for Friday's delivery, okay? It's filling the liquidity void to prepare for Friday's delivery, if you get what I'm saying. It heads higher, leaving behind a bunch of relative equal sell side liquidity, okay? As it heads up, it purges this high here, which is Wednesday high. After it does that, it fills the liquidity void all the way from over here. See that? Just straight drop. This is liquidity void. Just straight drop after a consolidation. Okay, and that consolidation would be this right here. All that consolidation, that's what a liquidity void is. When you have just 3 Jason Love candles, or just even a single Jason Love candle just shooting through the roof, or shooting all the way down to hell. Okay, that's a liquidity void, but it's after a consolidation, if you're wondering what the world that is. Thursday fills this liquidity void, and this one here, while leaving behind sell side liquidity and purging buy side. That's, I think, 4 factors I counted. Hold on, let me make sure. 1, it left behind a bunch of relative equal sell side. 2, it took out, it purged Wednesday's high. 3, it hit the order block we were expecting. 4, it filled the recent liquidity void. And 5, well, wow, 5, it filled the previous liquidity void from last week, from all this consolidation back here. So Thursday, what it's telling us is that this was for was to prepare Friday for its delivery, because Friday hasn't done its thing yet, which is deliver lower, right? So let's pay attention. How does price react off of, after doing all this? How does it react off the order block? How does it react off of the liquidity void that it filled? How does it react? Well, we can clearly see that it's meandering around the equilibrium, so it's showing high algorithmic Jesus Christ, I can't say that word. Algorithmic, there we go. Algorithmic activity around the equilibrium, so it's respecting it. Anyway, Friday opens up, drops. So overall, the whole manipulation template was delivered, right? Well, now let's take a look. Let's take a quick recap. Monday consolidates, so Tuesday can deliver what it needs to do, right? Creates that high, and then delivers lower, right? It does what it's got to do, right? It does what it's got to do. But like I said, Tuesday took over 2 rolls. It took over Wednesday's roll, I think. Let me check the chart, because I've been explaining a lot. Well, no, Tuesday did its own roll. My bad. Tuesday did its own roll by creating the high and dropping, as it explains here in the manipulation template. Creates that high, then drops lower on Tuesday. Okay. Wednesday kicks in, as it should, and it takes out that high. But it does 2 things. It does 2 different rolls, 2 different days in a single day. It does Wednesday's delivery in itself by taking out Tuesday's high, And then it overrides the role of Thursday by delivering lower aggressively. Okay, so if you want to see that for yourself, this is Wednesday right here. It should just by itself come up and hit this high. That's what it should do. But it does two things. It goes up and sells off. So since it did that, the last day that we're expecting this to be delivered, according to the manipulation template, is Friday's sell side delivery. Thursday of our week takes a time out to prepare Friday for its delivery lower by doing 5 things. Leaving behind sell side, okay, all this equals sell side down here. 2, filling the most recent liquidity void, okay. 3, filling the previous liquidity void. 4, hitting the most recent order block. And then 5, purging Wednesday's high. Okay, that's this right here. That right there, that's Wednesday's high. Liquidity purge. That's Wednesday's high. Reason it's a liquidity purge is because it came up to it. Once it came above it, it stopped. That's a liquidity purge. And then it reverses off of it, okay? Following this, price should deliver lower on Friday, right? Which is right here. That's Friday. Now, if we look up and drag our cursor up, we can see that we just have a bunch of candles dropping lower. So did the manipulation template get delivered as it should? Yes. There were a couple flaws, and just one, because Wednesday rushed. Okay, that's all price does. Whenever it takes over 2 rolls, it's just rushing. So price has to recoup some way, somehow. Okay, that's all that was. Due to its rush, Thursday was like, okay, let's prepare. Let's just prepare for Friday, and we're gonna just opt out. We're gonna we're gonna be a little gay today. That's basically what Thursday did. It was like, we're gonna be a little weird today. Some ICT concept traders may be like, what in the world is going on? We have to be a little. I'm sorry, smart money concept traders, but we have to be just a little homo for right now for this day, so Friday can deliver as it should. That's basically what it told us. Okay, and Friday did indeed did as it should by delivering lower. So this is the first example, the seek and destroy bearish Friday, in which Friday was bearish, but it wasn't an extravagant delivery like this. It wasn't like that. Okay, but it did do it. And keep this in mind. I'm going to say this again before I go to the next example. This does not form a lot, but it's a good thing to keep in your arsenal. Remember that, okay? This does not form a lot. And I just thought of something. Let me turn down my phone's ringer, so if anyone calls me, it won't absolutely mess up the recording. Anyway, second example, which is the seek and destroy bullish Friday. Monday should head lower. Tuesday should create a low, head higher. Wednesday should create a high, head lower. Simple, right? And then Thursday and Friday should keep going higher. Now, let's go to our bullish example. Let's delete all these drawings so my computer will not explode, because it probably will do that. Hopefully not. But let's delete all these drawings. Boom, bam, bam. And that should be everything. Yeah, that's everything. Next example, here we go. That's all the way in November 2024. Yep. Mind you, these are the only 2 examples I could find, and I was so blessed to find that one was bearish and one was bullish. Dude, going back that far in price action, these are the only 2 seek and destroy examples I can find for the manipulation templates. So that's why I'm letting you know that this crap does not form a lot, because it really doesn't. It really does not form a lot. Anyway, well, no, let me keep that line here. I was about to delete it. But first thing we do, like always, we jump to the daily. Right, we jump to the daily and see why price delivered that manipulation template like it did. So we're going to pull this back down, and we got to look for our example, which is right along here. Alrighty, let's look back, shall we? Let's look back. So first things first, it looks very wonky, really. Some very weird price action, I can't lie to you. But okay, let's start this off. One, we have I think this is a previous weekly low purge right here. So we have price hit this previous weekly low, deliver higher off of it, creating a break in market structure right here. There's your break in market structure. Why is it a break in market structure? Because price came and purged some form of sell side liquidity by coming down, and then immediately reversed off of it quickly, creating a break in market structure. Okay. Previously, before our week started, it retraced into this fair value gap, and into this inversion fair value gap, and into this order block here, but disrespecting the breaker, sadly. all at the same time. So it hits this, closes above the lower quadrant, as you can see. If you want to pull that out, sure, you can do that. Well, if only I can. Let me turn off my magnet. That's getting on my nerves. There we go. So now I can just pull that out like so, and boom. You can see that the bodies are literally closing right at the lower quadrant, okay? And then it even hits this order block right here, too. Oh, right. I turned my magnet off. Never mind. I'm sorry, magnet. I love you. I'm sorry for turning you off. That crap helps me so much, especially when I'm teaching you guys. I disrespected the magnet. I'm so sorry. I'm so sorry I turned you off. I said it gets on my nerves when I literally needed it just now. Anyway, it hits the order block, right? You mark it as order block. Hits the order block and respects the lower quadrant of this fair value gap right here. That is kind of within a break and market structure range, but I'll consider it because literally over 80% of it is in the range. So we can consider this a fair value gap that's a part of the break and market structure. It drops all the way down, disrespecting consequent encroachment, but hits the mean threshold of the order block. Okay, you see that? Do you see these candles right here? It hits the mean threshold of the order block, right? Respecting it, but while it does that, it disrespects the consequent encroachment of the fair value gap. So why am I addressing that? I'm addressing that because some people might think, oh crap, the consequent encroachment got disrespected, so it's going to run through it, right? No, we have a daily order block that justifies that, and it's like, oh no, you're good, you're good. You can disrespect it. You can disrespect this mean threshold, and you're good. That's basically what the order block is telling price. Like, yeah, you can use my threshold and disrespect that fair value gap. Like, you're cool, you're cool. If the fair value gap, I mean not fair value gap, but if the order block was not there, then it'll just run through the fair value gap, right? But since the order block is here, it's giving price the opportunity to say, okay, yeah, you can run through the consequent encroachment. You're good. I got you. And it'll just use the order block's mean threshold, in which it does here, to continue higher, okay? So we already have 2 reference points, right? That price is respecting the lower quadrant of the fair value gap, and then the mean threshold of the order block. Okay, pretty nice, isn't it? But let's also look here. We had relative equal highs here, 1 high, 2 high. They got purged right there. That's our liquidity purge. After price does that, it has a retracement into this break and market structure to continue going higher. So this shows that price really wants to deliver higher because it took out, at this time, was all-time highs and clearly wants to deliver higher after respecting this, what is it, after I was about to say disrespect, but after respecting this order block and fair value gap. And then after doing that, we accumulated a little bit to set the tone for price to go higher. It's basically like, okay, since we're doing this, we're going to accumulate a little bit so the next week can deliver higher efficiently, in which that week that we're examining is the seek and destroy week, aka our example. Okay, so we can clearly see that price wants to go higher. We have a bunch of evidence that price wants to do so, right? Yeah, we do. And we even have price just a lot of other things I'm not going to address, but I think we have enough. We do have enough. So let's drop down to the 4 hour and see if we got anything else that we can look at. And here we are. We have made it. We have made it. Here we go. Let me see. Can I apply the quadrants to this? Is this a large enough fair value gap to add quadrants to? Yeah, it's a 4 hour fair value gap, and it's like 50 points large, of course. So we can draw this out too, and we see that price hits the consequent encroachment multiple times and respects it. Well, not multiple times, but twice here. 1, 2, and then the bodies close above it. See that? Very, very nice. Very, very nice. So price is respecting a lower time frame 4 hour fair value gap that is at the mean threshold of the order block, showing more respect for price to go higher, right? Yeah, it's just common sense. Anyway, we also hit optimal trend entry of this dealing range from here to here. That's optimal trend entry, and if you notice, that fair value gap is at the 0.705 optimal trend entry level. So these are all of our confluences we have that price wants to go higher, right? And then we have this major consolidation before our week that gives price the opportunity to go higher because it accumulates, right? And then another thing, this is the last thing, I promise I'm going to shut up after this and actually teach you, is this intermediate term swing. Price is not going to come here just yet. It's just not. Why? Short term, swing in the middle, intermediate term. Simple, isn't it? Very simple, very, very simple. Anyway, there was something I was about to say also, but I think that's really enough. But anyway, to the 1 hour we go, and we scroll all the way back to our example, shall we? Here we are. Alrighty, here's our example right along here at this line. Alrighty, we got Monday, Tuesday, Wednesday, Thursday, and Friday. We have every day of the week as we normally should, unless there's a bank holiday. Now, let's go over what the bullish example should do. Monday drops lower, creating a low. Tuesday rallies higher, creating a high. Wednesday drops lower, creating another low, and also taking out Monday's low. Thursday and Friday head higher. Simple, right? Now let's see what happens within our chart. Monday heads lower. Tuesday heads higher but accumulates at the same time. Wednesday drops lower. Thursday accumulates. Friday heads higher. Now pay attention to this. There's something wrong here. And I think that's Thursday. Let me make sure. Yeah, Thursday does something wrong. Well, no, something before that does something wrong. For Thursday to do that. Let me see. Monday heads lower. Tuesday accumulates. Let me check that again. Yeah, Monday heads lower. Tuesday accumulates. Okay. And which Wednesday should head lower. Okay, that's a little odd. That is a little odd. Honestly, I just thought about that because I don't know why Thursday consolidated. But like I said, these templates, or whenever they deliver, they're not going to be picture perfect. There's not going to be a perfect world, period. So I guess this is the flaw overall, because it did do what it was supposed to. It did. Monday went lower, created a low. Tuesday went higher, created a high. And then Wednesday came down to take out that low. And then Thursday heads higher. Thursday and Friday head higher. So let's analyze this and see why each day delivered as it should. You know what I'm saying? Monday goes lower, as it should, right? It goes lower as it should. The next day, Tuesday, it accumulates, but it also heads higher while doing so. So if we look at our template, it does what it should on Monday, delivers lower, creating a low. Tuesday does what it should by going higher, creating a high. Okay, so we're doing good so far. Right? Wednesday drops lower. Is that according to what the template says? Let's see. Yep, Wednesday drops lower, creating a low and taking out Tuesday's low. Does it create a low? And does it take out Tuesday's low? That we should be looking for a yes and a yes for those two questions. Yes and yes. Okay. Next, what Thursday should do is go higher, right? It should do that. Keyword should, right? It should. Let's see. 9 o'clock is right here. It doesn't do anything. Literally. It literally. I wish I was exaggerating, but it doesn't. Oh, no wonder. There is a bank holiday. Okay. I was over here wondering, because look, pay attention to this down here, right? Pay attention to these times. This is 9:30 right here. See the time right there? 9:30, 10 o'clock, that's London close. 11, that's lunch macro. 12 o'clock, and then watch this. Boom, it jumps to 6. So Thursday was supposed to jump higher, but since there was a bank holiday, it was just like, oh, there's nothing we can do. Price has already done what it should on the other days. So this is, if you want to say, a picture perfect, this is the perfect seek and destroy manipulation template. This is. But with what didn't make it all the way perfect was Thursday being a bank holiday, which caused it to consolidate. So it's not perfect, as in we have all days, no bank holidays, period. But this is still considered perfect because overall the delivery was still as it should, okay? Monday went lower as it was supposed to. Tuesday went higher as it was supposed to. Wednesday went lower, created a low, and purged Tuesday's low as it was supposed to. Thursday couldn't do anything because it just literally couldn't. It was a bank holiday. And then Friday delivered higher as it should and shows on the manipulation template. So this was a good week, right? It did the seek and destroy bullish Friday pretty nicely, right? Yeah, I think we can both agree that did that very nicely. So that was both the seek and destroy bullish Friday and the seek and destroy bearish Friday. If you want to take screenshots of these, or if you want me to send screenshots or add some sort of PDF file of any of these manipulation templates, please let me know in a comment or in the comment section of whichever manipulation template you need, and I'll send them to you. You can print them out, stick them on your wall so you can look at them, because like I said before, you're not going to remember all 12 of these manipulation templates. You're just not going to. It's just not possible. There's no way. I can't even do it. I've only remembered like 5 of them so far, and I'm still trying to remember all 12. Don't try to attempt it. Just keep your brain at ease and just, stick it on your wall, put it in your notes, something like that, to where you can refer to it whenever you need to every day out of the trading week. But anyway, this is the end of the seek and destroy manipulation templates. I hope I taught you well. I hope you learned it well so you can absorb it, use it, and, use it to become better when it comes to these great markets. And this is the end of seek and destroy manipulation templates. I'll see you guys in the next one. Good luck and good trading.